having a pattern. Okay, not having, basically, I guess a better way to say that would be not having a reason to make the trade. Okay, now this can come in usually one main form, and that is we're now looking at a 60-minute bar. That is looking at a single time frame and getting so focused on the single time frame that you lose sight of what is going on in the marketplace. Let me give you an example. Yesterday when the market was bouncing up, and I believe it was it was yesterday, and the market was bouncing up, and you see that the market starts trading sideways, you might have a tendency to become abnormally bullish, thinking that, wow, this market's really showing some momentum to the upside, it's got to bounce from here. Well, if you forget to go back up to, say, the 4-hour bar, it would be easy for you to forget all of this momentum. I mean, we would be looking at taking a trade long right here. Well, you can see that the market has had a very drastic move down, closing nearly on the low on every single bar, finally finding a little bit of buying support in here. But remember, the principle of the 3-bar reversal is that momentum is reversed enough so the market starts making new highs. Now, if you look at this on the 4-hour bar, you can see that this market is nowhere near coming to the high of the prior 4 hours, so you're not really seeing much in the way of reversal momentum. Now over here, don't we have a completely different story? Absolutely. You've got a different story because you're coming up off of the bottom very aggressively. The next bar could not follow through. Let me clean this up. You've got buying coming in here. You've got the market unable to follow through to the downside, unable to follow through to the downside, and then finally the bars start turning up. Now we're starting to see an increase in momentum back to the upside. So you got a completely different scenario here in the two. But let's go back to this example here. Looking to buy on a bounce here, it's an okay idea, but again, you've got to see the pattern. So the key here is going to be zooming out and looking and see, is the market near a support point? Now remember, this market is trading right here at this level. Let me go ahead and draw a line roughly across the chart. I mean, is there really any kind of logical point in the marketplace near? There's a couple, maybe, well, actually, you've got one there and one here. 2 areas on the chart out of probably 6 or 8 where price intersects, that there was any kind of reaction at this particular price. You can see that there's actually a little bit better support here, certainly much better support down here, because you've got a couple of areas on the chart. So you can see that it's just there's not really much of a reason for the market to find support there. Remember, support and resistance are defined by the decisions of other traders. At this point in the marketplace right here, it's resistance because otherwise price would have kept going. So for whatever reason, the marketplace considers this price level to be too high on the British pound. The same goes for this level here, and this level here. All of these areas represent places on the chart where traders figured that the pound was too expensive. Just like down here and down here, traders figured that the pound was too cheap, so they bought it. These would be better areas if you were looking to buy against to find a pattern. Now if we zoom back in on the 4-hour bar, you can see that around this area on the chart, the market was doing what? Big time momentum. I mean, look at this bar. Just a huge amount of momentum. Now, granted, by the time the market got, let me do this. Let me, black this out as if we can't see it. Now look at this. Okay, if we were looking at the market as if it were actually happening, and we were thinking, okay, the market, when it gets down to this level here, I want to buy. Remember the warning signs. The warning signs of the market are one of the warning signs is large bars. This is a very large 4-hour bar. It starts up here at about 97.90 and is all the way down to about 97.30 by the time it gets to this support level. So you've got 70 pips in one 4-hour range that the market has moved down. Remember, when you see large momentum bars, you don't want to try and step in front of it right away, so you wouldn't just be looking to buy right in here. you would be waiting for some kind of reversal technique. You could use a 3-bar reversal trading tactic, a little dipper tactic, or even a sneak attack tactic. Boy, that's a mouthful, isn't it? In order to make a trade. But the key is you have a reason. It's fine and perfectly acceptable to identify that this area is support and this area is support, but you've got to make sure that the market participants are thinking along the same lines. So eventually this bar pushes down. You have a huge down bar. I mean, this 1 4-hour bar, I think, eventually was about 110 pips to the downside. But now we're coming back into this area here, which is support. Okay, it's support again because the market didn't go any lower, and traders, for whatever reason, market participants thought that the pound was too low. So now we're back into the same place, and now we can start looking for a pattern. So the pattern is what's going to help you to, number one, gauge your expectation.